Hello, hello. How is everyone doing this morning? We got quite a lot ahead for this week. We have some major geopolitical events coming out. We have Powell's Jackson Hole economic outlook this Friday. We have flash PMIs coming out Wednesday. We have the UAW, the United Auto Workers Union, continuing to run their negotiations with the big three automakers and potentially go on strike. BRICS are having their geopolitical meeting. We're having the GOP debates. There's a lot going on today to just check how we should expect things to develop going forward, culturally, politically, and economically. So every single day it's going to be just going through all that information and then trading day by day as we get through these events. So, with all that said, I'm going to hop on into the charts. Let's see here. Okay, and that should not be in the way anymore of my numbers. Cool. And remember, anyone who wants to hang out can come hang out in the Discord. Also, we have Hurricane Hillary hitting the West Coast. I should probably do this real quick. I'm going to bring up Discord here. There we go. So we got some trade plans, some new trade plans in the trading group and publicly here in the trade plans. So again, if you're watching and you're wanting to make some of your own trade plans, go ahead and post them on in there. This is a particularly useful list for keeping track of those major events I was just talking about. These are all of the resources. So all these chat links will take you directly to each of these major points. I don't have a link yet. I'll probably get some off Twitter for BRICS. GOP debate, that's happening. Congress potentially shutting down the economy again if they don't come to another deal by October 1st. So there's risk there. There's quite a lot of stuff going on here. And then here's the Hurricane Hillary stuff. This is the projected path it's going to take going forward. And yeah, that's a little euro dollar. Oh man. Is everything bouncing back now? Oh, we fell pretty hard this in the last day here in the opening. We fell like close to 50 pips here on the day. And it looks like we could be topping out here, but I'd be super careful. Oh, hold on, let me go ahead and hide the Discord. There we go. Yeah, there's still some downside potential here. You can see those probabilities get big on the downside here for the week ahead. And then to the upside here on USD CAD, there's still some risk of going up. My expectation is you just continue this trend and go higher. You'd get a really good short around this R1 and then take it lower at 136. But that didn't happen. Instead, we've been going down here. So now we have to look at some lows, some low opportunities here. Euro dollar, on the other hand, 50% of the time you top out roughly in this zone right here. It can get a little tricky going into these events for this week. The volatility around all these probabilities is probably much higher. Because dude, these risk events, Like, for example, with the union strike, which I covered extensively in my last stream on Friday. If those union workers actually go on strike, what will end up happening is there will be a lower supply of new cars. And when there's a lower supply of new cars, we're going to be back in the scenario we were in during 2020 and 2021, where used car prices shot through the roof because people who wanted to buy a car couldn't get a new one at a decent price. And the price of new cars went sky high because there were so few of them. So used car prices could massively re-inflate. Now, there's an assortment of other things that we have to keep an eye out on for inflation. But if those auto workers go on strike, Q4 CPI, the CPIs around the fourth quarter here might see a little bit of a bump up. And that's going to keep the Fed, I think, on the more hawkish side. Now, markets are already pretty much prepared for a more hawkish set of central banks. In fact, the Bundesbank this morning came out and said, we actually have expectations for slightly higher inflation now going forward. We've updated our expectations. So I think we'll continue to see, messages like that come out of central banks where they say, hey, the developments coming up in the next couple of months, we are going to err on the side of caution because we think inflation is still a pretty considerable problem here. And they're definitely not wrong. They're definitely not wrong. And on an absolute level, inflation is still too damn high. So, man, it's going to cause a lot of people to be extraordinarily upset because just people's buying power is going straight into the toilet. So I'd be especially careful. A lot of outlooks are still pointing out dollar probably gets stronger into Q4 and Q1. It could be a bumpy ride here going into this fourth quarter. The volatility it could be quite tremendous. So, with all that now, that preamble kind of said and done about what I think is going on, why don't we, for example, just check out how equities are performing, and then we'll continue going down FX, and we'll check out some commodities here for the week ahead. So let's check out our pivot probabilities here for the week ahead. 85% of the time, you get your high somewhere above this weekly central pivot. So I would anticipate we, at some point this week, regain 4,400. How high we'll go into the 4,400 area, your guess is as good as mine. You can turn on range probabilities and see, well, you can get a decent chunk of your highs here around 4,420. And if you do especially well, you can shoot for maybe 4,480. That makes sense to me. And then when you look at the downside, you're probably either going to stay fairly range bound here, unless you go below that S1, which is at 4,300. So you got quite a wide range here between I would say between 4,440 and 4,300. So there's a bit of a skew to the downside here going in on the S&P here. Oh yeah, we had that big old move on Bitcoin. Yeah, didn't I call that or what? Right? Called that way at the beginning of the month. I'm going to turn off pivot probabilities for this one. Range probabilities. Yeah, pretty good shot of at least coming down to sub 25 sometime this week. If we do rise, somewhere here in the low, or like just above the lower part. So what, the lower half of the 27K handle, right around here. That might be a decent spot where I like to pick up a couple of shorts on Bitcoin. So that's just a follow up on Bitcoin. Let's go ahead and actually check up NASDAQ. People like to compare Bitcoin and NASDAQ quite a bit. For the week, we're at a peak in our little distribution. So maybe there's a shot here, but after such a hard fall, it's like, well, you got to check if we're actually going to continue falling from here or not. I'm still not totally sold on selling this, and you can kind of see why. You got a peak in your distribution right there. Probably it's the low for the month. I pointed this out with Apple, although this definitely did get stopped out. I gotta point out, right? There was we're gonna go ahead and load this up. It went really, it just kept skewing and skewing and skewing and skewing. Yeah. You only get down to this level. Yeah, what's that? It's like 85-ish% of the time you come down here. This is the 75% probability. So you don't come down here all too often. So yeah, man. So that sucks on Apple. And as far as NASDAQ goes, that was, you could kind of see that coming from a mile away. Yeesh. So low for the month could be in. Where could we end up closing? Probably back above that S1 pivot, probably back above 15K. I would not be surprised if we went back to 15K this month. Alrighty. So let's go ahead and move on back to FX. Let's go and check out the rest of the US dollar pairs for the day ahead. Oh wow, check that out. I at least had one trade workout. I posted an update like, oh, here are my positions, and people were like, oh, what happened with pound dollar? Like, oh, that hit the take profit for the day. That one's done. I posted in the trade group, I was like, hey, sure, I can get a short here, but I'm also going to slap on a long here. You're at a peak in your distribution on the low on this one. You're at a peak in your distribution at a high on this one. So, and we're now at another high peak in our distribution here on the day. Let's go ahead and real quick. Where is it? Bring up the Discord, and we can go into general. Yeah, set up a long short on US dollar with these two pairs, euro dollar. And there you go. And these trades were posted already ahead of time. Yeah, that was pretty straightforward, I'd say. Yeah, isn't it nice when someone's actually posting their trades and showing their trades, and it's like, oh yeah, he said this would happen. This is what he was doing with this approach. He lost on one, he won on the other. Good for him. And now it's at another peak. A short here could be executed like so. Probably taking it to end of day, so you'd want to look at your closing probabilities for this one. Let's go ahead and look at them. So let's see here. 75% of the time, you end the day below the current price. Not the worst idea in the world, but more importantly, what's your probability of going above your stop? Like 40% of the time you go past your stop and then into this spot here. But that's a reasonable stop, in my opinion, for stopping out at that R2 pivot and then going effectively trying to get another short up to R3. But in this scenario, you'd probably want to do a continuation trade on the stop out there. You'd probably want to flip at that spot and actually take it long. Because the likelihood is if it comes from here all the way up to here, you're probably going to end up closing the day up here. You're probably not going to go all the way up here and then all the way down. Unless it's very dead, simple, obvious that like some economic event is creating some volatility, and don't get me wrong, that might be a decent plan. But on a day where we're at a likely low for the month on euro dollar, so if you go ahead and just look here and look, seasonal positive expected value, let's go ahead and load our low probabilities. There you go. You got your peak in your distribution right here. And you can see bearish continuation set up right there. We pointed it out 4 days ago. If you kept going lower and lower and lower, that's the bearish continuation into this peak of the distribution just above the S1.5 monthly pivot at 107 here on euro dollar. Yeah. And then you can probably take that bullish continuation trade on the day if that happens into a weekly high and exit the following day on a weekly high, right? And we can go ahead and look at our probabilities again. Oh yeah, look, that might be the probability weighted pivot high too. That's neat. Around 109.5 if you get that bullish continuation setup. So yeah. Yep. Let's see here. Anyone in
Nothing right now. I'm just waiting for GJ to give me my second entry on my experimental account. I'm waiting for. I mean, Euro USD was gunning towards the stop loss towards for my first position, but now it's sitting halfway there. USD CAD is running towards my second long entry for the day.
Mm-hmm.
You know, yeah, and stops are pretty good for there. And then I'm just waiting. I mean, I have NZD USD that I can get in for some shorts at. AUD USD look like I'm about to get into some shorts there. And then GU look like I'm really about to get into some shorts there. So I'm pretty much shorting the USD pairs for the first optimal entry for the day. As I said, USD CAD. I've already lost 20 basis points on my first entry, but that's just 20 basis points. And now I'm just looking to get into my second entry on USD CAD, looking like it's gunning down towards that. And then if I lose that one, I'll have 50 basis points effectively lost from USD CAD. But then I have have one, two, three, four other potential positions that I'm about to in, or one I'm in, and then I still have more and more optimal entries. So on the day, we'll see how I close. It might be a losing day, but even with my losing days are controlled. So
Well, especially again, the whole thing is you're not using 1% risk per trade because, dude, if you put on 5 or 6 or 7 trades and
I mean,
then they're
technically,
all losing, it's like, oh shit, I'm
if you really
down
want me to be
5-10%.
technical, every single day. Well, if I were to put on optimal, if I were to put on my first buy, first sell, second sell. I mean, first buy, first sell, second buy, first sell. I mean, second sell every single day on my account. If I were to just hit my positions, hit stop, hit positions, hit stop, go all the way to my other positions, hit stop, hit stop. I'm risking 6% a day, but that's not really what I'm truly risking at max. If I lose all my positions across all 6 pairs, let's say buys, all the buys just stop out volatility wise. Like USD just flies up, and I'll lose 3%, but I know that throughout the week I'll probably get that back. Like it's just like a once in a blue moon type of event, especially at that second entry. Like there's only like a 11.6% chance that we close below that point on the day. So like there's at my first level, there's like a 60% chance that I make that. Like your USD is already back to my entry. So it's about to be in profit soon. And then on my second entry, there's a 90% chance that I make money on that before the end of the day. So the basis points thing is keeping me, active. What I'm seeing in the market right now is I would just say we're going into New York Open. We saw some relative dollar strength. I mean dollar weakness, I'm sorry. Saw some dollar weakness that's rebounding right now. If you look at the 2 hour time frame with range probabilities, you can see that we are rejecting off of likely lows at 13.8%. And then this is probably the low for the actual day. At most, it can probably go down actually that bottom of this 2 hour wick. It probably can only go down to 127 more pips on the dollar index. So
Oh, for the
right now we're
DXY, you're
priced
looking
in,
at it.
yeah, for the DXY. So right now we're priced in probably at the lows for the day. So my Euro USD position hopefully goes into profit. My AUD USD position, it never hit my first target, or never hit my first entry. NGD USD didn't hit my entry. GU didn't hit my entry. So as I said, stopped off for 20.
I'm
Stopped off for
looking
20
at it.
basis.
I'm looking at the DXY
Yep.
2 hour here, dude. Like,
Yep.
oh man, that is
And that's just one way.
nasty.
That's just one way I can just look at the relative strength of my position and what I see. But more than likely, as I said, it got stopped out on my first USD cat position. Um, Euro USD is right at my entry. So even if I make up what I did, that I hit no other positions, effectively I'll still end up the day probably at break even, or maybe 10, 20, or 30 basis points, which is, from a perspective, $30, $330 is probably what I can end up on the day. And that's by the way, if anybody is hearing this on the stream or anything, I'm a student of Joe's. I've only been in here truly a week, and this is the type of analysis and trade I can give you using basis points and risk. Effectively, my strategy is on the day-to-day basis, except for extremely volatile days. I'm throwing on 6% of risk a day, and it might sound like a crazy number. It is, but it's because I'm diversified, and that's between 4 different positions on 6 different pairs. So, and usually I only hit 1 or 2 of those positions, and every single day I've been able to be profitable. And today doesn't look like it's going to be a negative day either. Just stopped out on one position for a simple 0.2% risk. If you're thinking about that, we think of it in terms of basis points. So I lost 20 basis points, but I average every single day 120 plus. So 20 is really, really nothing right now. And then right now, as I said, one of my positions is gunning right back down into profit, and nothing much I can truly say about that.
Yeah, dude.
So
No, you've been fucking killing it. You've
yeah.
been fucking killing it. You've been going hardcore, putting in limits religiously
Mhm.
every single time a new day
Exactly.
opens.
Every single day a new opens, I'm putting in limit orders. I didn't do the ones on the weekly yet, just because I'm with the equities. I might just open up a new, because I want to do the funding route. And the thing about me is, scalability is what I'm focused on. Instead of going through the hard ass Ninja Trader futures trading prop firm, where I might just get a CFD account with the same funding company, just a different funding company, and I might just swing trade equities and commodities through CFDs on that account with just a larger capital basis, but it's the same exact thing. But on every single given day, I'm risking 6% of risk. So right now that's $6,600 is a day of effective swing positions and limits. And if they get stopped out, it's it'll be like an eclipse event, like a 100-year event. If every single one of my positions just goes to the target and gets stopped out across all pairs on 4 positions each, it's just not going to happen. So
Yeah, you
everything
check
is
this
doing
out on
pretty
gold
well.
today on the 2 hour.
Let me see what's
It
going
just
on. I had to
tapped that
see.
spot right there above the S1, this area right
Yep.
here. I mean, you could have had a limit there. I mean, that's also the nice part about this is you get the distribution for the next for the day,
Yeah.
and then you're able to just put limits at these spots and then stops like 5, to 10% in probability away, or wherever
Yep.
there's like a big chunk of like these low probability areas. They
Yep.
use those thin probability spots as the areas you would look for a range as your range for where you would want to place a stop, and then these
Mm-hmm.
peaks here where you'd want to get in. But because
Yep.
you know that for the rest of the day, the week, the month, you can slap on limits. And so long you're doing stuff along the lines of basis point positioning, you do that for 6,
Mm-hmm.
7, 8 pairs. And then instead of doing 1% risk per trade and then losing 5% or more of your account on 5 trades losses, you lose 5 trades with 10 or 20 basis points per trade, but you've
Exactly.
taken 10 trades, half of them so let's say you do 20 basis points on 5 out of 10 trades and they're losers. Well, then
Mm-hmm.
what about the other 5 trades that were winners? Well, those could do 40, 60 basis points. You could have a 1.5 to 2.5 risk reward ratio very easily if you're
Yeah. I
targeting
mean,
the high of the day or
or you target
or
this
a likely close of the
distribution.
day.
I target the distribution right under it, and then like for example, this Euro USD position, and trust me, I've seen it happen multiple times already this week. This Euro USD position, I can just show you the short position, Euro USD short at this first level.
I mean, I'm
My stop
live on
is
stream.
16.
I did euro dollar too. I was
Oh,
like, hey,
okay.
go short here at this spot because there's the
Yep.
peak in your distribution. Like euro
Yep.
dollar, and I even said, hey, this actually would also be a good candidate for continuation if it did stop out, because
Yep.
you'd probably go up to that R3, and anyone who's using pivots isn't gonna anticipate, like, people who are trading pivots will just be shorting the whole way up.
Mm-hmm.
I mean, they don't know what a chicken trade setup is. I mean, so many people ask me when to use the chicken setup, and and that's when you go long at the R2. And just FYI for anyone who does pivots, I'll go ahead and show you chicken bullish. That's going long at this R2 and your target in this spot right here as your exit. That's the chick. This is literally saying, hey, this bullish continuation probability setup. Yeah, this is the chicken trade bias, and you can use that as a way to describe it to other pivot point traders. Like, I know this because I've built these tools and I've been trading them for, so long. But man, like this gets pretty straightforward. It's like, oh yeah, there's a continuation there on the stop out. Like it's not enough just to do the risk management and to be risk aware. You also have to be constantly looking for opportunities. That's why I called the community in this channel plan to profit, rather than manage your damn risk, right? Because you will have, if you're not obsessively looking at like spots where, oh, this could probably work out, and you're doing research on, oh, these assets could potentially move. You have to be looking for opportunities in life, and then also be aware of the risks and potential dangers of those opportunities. Like,
Yeah. And then one thing also that's good about this community is like now that I've effectively, put my positions on Euro USD, it's either going to get stopped out or it's not. I'm just pretty much aware that I mean, I'm closing my charts out now. Like, I don't even have to look at my charts for the rest of the day.
yeah,
They're
we're
done.
at that point now for
Yeah,
the.
I'm closing the charts.
It's not like we haven't been here before either. It's like, yeah, we've put on our trades now. We've likely hit our top or likely hit our low on a lot of these charts, and now it's like, okay, either this thing's gonna work out or we stop out and we're done for the day. So either way, whether it works out or it doesn't, it's trading's done for the day now. Like, we've either bought the low or sold the high, or not. And believe it or not, you can hit a likely top and a likely bottom across all the
Every
different
day.
USD
I've
pairs.
done it before. I've had a 15.75 R day, but this is before I actually took the trade live. We're on AUD USD and what was it, GBP AUD. I hit the likely bottom, sold at the likely top, and then my sell at the likely top also hit the likely bottom for the day. And I made the exact same amount of, and it was like a 3 each. So like 3R multiple at the top, 3R multiple at the bottom. So ridiculous.
Yeah, you know what's hilarious is that these peaks in your distributions line up with um, the expected move calculations for options contracts. So if you go to like the S&P or the Nasdaq and you look up the expected move for Nasdaq for the day, it'll line up with these secondary peaks, roughly the ones that are closer to the. Let's go ahead and look at Nasdaq real quick one more time and see where these peaks are here. So it's like right around here or roughly around there, and then there and there. So the expected move, what, 0.9%? Somewhere between 0.9 and 0.7%. We'll probably have someone who will check up on that. But yeah, I mean this makes it pretty straightforward. I mean, I always say that that's like a habitual statement from me now, like, oh, it's so straightforward. But in reality, it can be things that usually are very, very complicated. When you actually understand how they work, what they're doing, and the people who've come before you to try and understand them before, and you build upon their work, suddenly things don't, they might be complicated things, they might be hard things. The math that I use to build these indicators are not so simple. But you know what? If you want to understand just how these things work, how the world works, you put in moderate amount of effort. It's not impossible to learn these things.
For sure, I can really agree. And as I said, um, it's crazy because if you if you guys were to see my equity curve, with me risking even less than I did last week, you guys would see my equity curve is like it just rocketed up 100%. Um, it's just really, really just doing well now. And then my trading itself is just it's so autonomous that I don't even have to like really do much because as I know, at least at my second level entries, and that's the craziest thing, that there's a 90% chance that every single day I'm going to close, not close at my take profit, right, respectively, unless I look at my closing chances, but there's a 90% chance that I'm going to close at least at my what is it called? At my damn closing profit. I'm sorry. It's a 90% chance I'm going to close in profit. So that effectively just allows me to just. I'm not even looking at the charts right now. I'm just in the trade chat. Probably going to go out. I already went to the gym for the day. Like effectively, my trading day is over.
Yeah,
I could
now
just
we
read
gotta
market.
go do
Yep,
now we gotta go
market.
do our research at this point.
Yeah, now we have to actually go do research, and then I just got 3 screens. One I'm doing research on with Joe. I have a random YouTube video called "The Average Week of a Full-Time Trader," and then my other screens are just focused on nothing. At 9, from 9 to 10, I can go do something else, and then I'll come back at 10 to 12, and then finish my research for the day, and I'll hopefully be off here before 1 p.m. And that's my entire trading day done. Uh, Yep, that's pretty much it.
Yeah, right now I'm just looking through. Let's see here. I'm just going through my email, seeing if I got any new outlook or anything, so that then I can bring that up on the stream. Because I mean, in all seriousness, guys, just go to that like big ass post I put in the announcements. I'm gonna be following up on that pretty much just for the rest of the week, digging through that. Oh, and oil probably hit the top on the day.
Yep. Damn, GBP USD. Only thing that sucks about it is you're gonna be like, wow, I was a few pips away from my likely
Oh,
distribution
and
for a
it's
sell.
this tippity top to the day.
Yeah,
this buy trade
I
is
was just
tippity top
I
of
was
the
a
day.
little bit away. And for my GU, I was literally how many pips? How many pips from getting put into like one of the best shorts here? 7.3 pips away for GU, and on AUD/USD, which is my favorite pair to trade. I was as well. How many pips is this? This is about to be small. This is a very, very small amount of pips. I was 4 pips away from my limit order, and it's just like, damn, yeah, I missed out on that trade, but I still have other trades going. And that's the only thing.
Which
Like,
are
you'll be so upset at the trades that you know you didn't get into. um, it just changed. It revolutionized your trading. And as I said, for the rest of the day, you do research. I do multiple things, other businesses, other jobs. Like as I said, from 9 to 10, I'll be doing a job, and then for the rest of the day, I'll be doing market research. Um, and then yeah, then everything else is just kind of autonomous. It changes the way you trade for sure. If you want to actually get in here and you develop your own way of thinking about it, and just simplify it. That's one big tip I could say. Is just keep simplifying, keep simplifying, keep simplifying. At least, or be as complex as your brain can carry. I'm not the smartest guy. I'm not a Joe. I'm not the smartest guy in the world. My brain can only understand a few concepts, so my concepts was to set and forget and put limit orders, and that's exactly what I did on the smaller time frame. So that's the best things I could say right now. And then as I said, I may have lost 23 basis points earlier, but right now with my Euro USD position not even doing too much.
Oh, I
Um
lost 23 basis points. Oh no.
Exactly, but with my Euro USD position right now, I'm already recovered 4 of those basis points, and then it's looking like it's about to probably be able to be recovered within the next hour or two, plus another 40. So even on that day, and then especially when you realize how much equity, how much funding you can get. Let's say you do funding account, or you just do a personal. I do certain different things on different pairs, like AUD/USD. I have a $200 account, and I risk $50 a day on those on an unregulated 1 to 500 broker, which I don't recommend, but I can take a profitable. I'm not gonna be profitable on that. Withdraw that to buy more funding accounts, and then eventually you gotta think. Let's say you have $1 million in funding, and you pass phase one, phase two. Imagine just 40 basis points a day on $1 million in funding. That is, you know, ridiculous. It's $4,000 a single every day.
Mm-hmm.
And as I said, right now I average 120. So that would have been $12,000 every single day I would have averaged. But the more importantly is, as I said, understanding the side, not the psych, because there's really no psychology behind it. Understanding the market research, and then doing everything else in your life to make sure that you are doing a better job and changing yourself as a just more positive person. That's the most important thing.
Oh
So
yeah. Oh yeah.
yeah.
I got some stuff sent to me. I got one thing sent to me from Financial Juice on expected ranges, high low range for the major economic events ahead of us. And it does look like we have a skew towards negative surprises for all the flash PMIs, especially the European ones. Let's see here. UK services PMI, definite. It actually has a bit of a skew on the upside, actually. A bit more people, like the upside forecasts are pretty darn far on that one. And then the manufacturing, though, has some downside on that. Let's see here. Anything else on this? Oh, there's downside on US flash PMIs. There's downside on that. Damn. Yeah, we could have some downside surprises in these flash PMIs. That's not great, because if we do actually realize any below forecast PMIs, I would rather. I don't know. Based off this, I'd rather be dollar long going into these PMIs myself. But it really depends on are we at a peak for that day, at a low or a high in a district? Like, in all seriousness, I'm holding my dollar longs here for the rest of the week, because I also think that, for example, euro dollar, if I bring up on my chart, euro dollar here could be a good short for for the week. This spot
That's
right
what I'm
here
in
could
right
be good for
now.
the week, right? See here, this peak on the week. So this could be like way down here. So this, I have a trade in a similar spot here, not exactly. But I'm doing fine. I'm now in the green on this one. And yeah, I'm going to probably be holding it to a likely low. I think that it's, I mean, looking at the probabilities, me interpreting the probabilities, dude, the probabilities are pretty strong that there's going to be, well, look, if you look at pivot probabilities, which is the seasonal information, this is saying, hey, 45% of the time, your low comes in here between central pivot and S0.5. And then the other 50% of the time, it comes in below S0.5, between there and S2. So because I don't have the same degree of confidence, because of the most recent information, see, it's one thing to take seasonal data, which is this indicator, these probabilities come from seasonal information, and then trying to force yourself to trade in that seasonal direction when you don't actually understand how the most recent information may not behave seasonally. Because if you are not already established in a period of time that is already following seasonal trends, even remotely, it doesn't make sense to then use seasonality. Or if there are skews, like I'm pointing out here, potential larger risks than in normal situations, higher volatility situations ahead than normal, it just makes it more risky to trust the seasonal data, and that's entirely rational and can be easily deduced. It's just, well, people who are using seasonal data don't always think about looking at seasonal data in that way because they were never trained on it because they're retail. But me, when I look at this, I say, okay, there's probably going to be a low just below that S0.5, or there's going to be a low here in this S1, S1.5 spot, or you're talking just above S2.5. And down here, you're talking 107.5. Here, you're talking 108, effectively, the psych level 108. And then here, you're talking 108.5. Note how it's going in 50-point increments, but the drawing of this indicator doesn't come from, where's the 50-point increments occurring. No, this is a probability distribution. So this is literally just taking the data, drawing the distribution of where lows occur, and it's saying, hey, these are where your lows frequently occur, and here's the probability that you get this type of that you get this return. Here's the probability you get this return. So our decision to use these distributions is, our problem. Is this, I would rather use something that gives me a probability of, I've bought a low, I've bought a high, because from there I can calculate an expected value. I can say, here's my probability of success, here's my probability of failure. And then I can say, well, here's my risk I'm going to put on. So my probability of failure and my risk, and then my probability of success plus the opportunity, how far this thing could potentially move. If I want to go here and say, what's the probability that I get a new high from here? It's roughly 65% of the time we get a new high. So I can risk manage this. Like, it's worse than a coin flip. It's not usually in my favor. But I know already right off the bat, even when I was looking at that 2 hours, like, hey, in the scenario that, we aren't topping out like right here, right now for the week or for that day, there's this lower probability area here that I'm not very confident in expecting a top for the week or a top for the day. So I might instead anticipate, I rather just would like to see, if we don't top out here, I would anticipate we go to the next most probable area where we would based off the probabilities, anticipate the next high for the week. Like, it's effectively a descriptive statistic. We're not trying to predict anything. We're just looking at these statistics and saying, okay, is this a reasonable probability? And based off the things we know about the market, because look, if you just blindly trade these probabilities, you'll trade like crap, and you'll still not be profitable, even with these probabilities, if you trade like crap and you don't know what you're trading. I mean, listen to, I'm so happy about what Isaac's doing, because he's like, I'm pretty much done for the day. I got all my stuff set up, and now it's all research, right? Now we have to go down that big ass list of stuff and see if there's any updates to any of those major events coming out this week, so then we can stay on top of future expectations for various countries, for currencies, for assets, because those things can move prices and change the economic outlook for the fourth quarter of this year and the first quarter of next year. And potentially those things cause volatile shocks and jumps in prices. And that's a risk that we got to be aware of and manage. And that's not something that these probabilities are actually really going to help you with all too much. Sure, it's like, hey, we had this big jump because some economic forecast got updated and it says Europe is going to do really, really well, and it, jumps all the way up to here. Well, guess what? If it's good enough, you might end up going to this chunk, right? That was just off screen right above you, right? I mean, there's all sorts of risks with these things. And to interpret this stuff and stay on top of all the information really requires a lot of work. And you got to be able to interpret all that information accurately and in a timely fashion. And then in your head, translate that into, okay, that will probably make this currency go up or down, or this equity go up or down. Because that's generally what a professional analyst is doing. They're interpreting new information as it comes along. And they're reading outlooks, right? They're doing their own analysis with their own proprietary tools like this. They're using whatever models they have to figure out valuations. And then as they get information about what it is they're trading, they can discretionarily decide, oh, based on my valuation method, I think we're going to overshoot the valuation, or I think we'll go to this valuation. I need to change this multiple now, so that then I can update, it's all about figuring out where's the value, where's the new equilibrium. Everyone's got their own pricing model, everyone's got their magic sauce. It's just more or less a matter of, do you have yours? Or have you been trained or taught to use someone else's, or have you built one? There's all sorts of ways to figure out the valuation techniques for assets. This isn't the only way. The guys at Renaissance, good Lord, Lord knows, like, the type of data that they have and the type of models that they have. So, but just because they, some billionaires have fantastic models and smart people and proprietary data, doesn't mean that there isn't something you can have that's your own proprietary stuff, or have your own interpretations and read these outlooks and get smart about the assets that you're trading. Because, again, in the end, this is, there's real incentives behind what moves these markets, and so long you actually understand those incentives and the future expectations behind those, and how new information changes those future expectations, it'll be a lot easier to figure out, oh, I should anticipate this thing to go up or down, but is it a good time to get in or out? And then your decision to get in or out is going to be entirely dependent on your flavor, your TA, your FA, your quantitative analysis, your sentiment analysis, whatever. But one thing I'd like to just preach about is get smart about learning more about what it is you're actually trading, the current expectations, the future expectations, and things that can change those expectations. And if more retail guys just did that, they'd be closer to what professional analysts are in their decision. And people already know, like, oh, professional analysts don't always hit the mark. But guess what? They're professional because they are able to make their living off of it. Even though they can be wrong quite frequently, they are still able to make money because of how they do proper risk management, off of how they're able to deduce the different risks and then therefore attribute different probabilities to them, and then size their positions correctly. And then they do it over and over and over again for like 10, 20 different positions. And then it's really, really, really hard at that point to go broke, because mathematically it's still possible, but you would need to lose a lot repeatedly in those scenarios. It's like the whole thing that I have against people using 1% risk per trade. You take 1% trades, you're down more than 5% a lot of the time. Well, if you just did 1% risk per trade instead, and you broke that up into 5 parts of 20 basis points, if the probability of you winning or losing, if all of those trades are independent of each other, and the probability of you making money on any of them is a coin flip, 50-50. You know what the probability is on 5 independent trades? It's like, what's the probability of you getting 5 heads in a row or 5 tails in a row for all 5 of them winning or all 5 of them losing? The point is like the expected value. Because if you fix yourself to 20 basis points of risk, but you're able to shoot for 2 on your risk to reward ratio, or 3 or 4 on your risk to reward ratio, that's how people are able to stay in the game. Even if they have a 50-50 win-loss ratio on some trade, they don't risk so much that they'll get screwed on 1 or 2 bad decisions. A lot of people, it's just, it kind of sucks to see people lose and go broke, and then $10,000, $20,000, $30,000, $40,000 later, oh man, I've lost my life savings. Oh man, I'm losing my home. Like, trading can really hurt people, especially if you're retail and you don't really know what you're doing, and you're doing no research, and you're playing a guessing game with your probability of success.
Jay, I'll be back in about 30 minutes.
Gotcha. I'm just wrapping up the stream now here. I'm giving a good old rant.
Okay. Okay.
Yeah. I don't know, you guys. There's only a handful of people here watching the stream. I hope you guys who are listening here are enjoying the rant. But man, I've seen too many people get hurt on the retail side with crap tools. Oh man. And there's no guarantee of return with this thing. I can just legitimately point out, hey, these are the probabilities of success and failure. Does this make sense to take this risk or not? And maybe a risk I want to take is a risk you don't want to take. Maybe a risk that you want to take is a risk that I wouldn't want to take. And that's ultimately what, makes all this, like, not financial advice. I'm breaking down some statistics of distributions of returns and pointing out, characteristics of those statistics and saying, oh, I'm trading these characteristics. And I have a tool for it. You can get it for $100 a month and join a trading group and whatnot and do analysis and trade research with me. And that's that. Like, there's no gimmick and nothing else. I'll yell and scream at you if you use 1% risk, but there's nothing I can do from stopping you, right? Like, you'll probably end up blowing up your account on 1% risk because of these statistics. But I'm not going to just tell you flat out, if you do it, you want to risk 1% of your account, go ahead. I'm not going to stop you, and I'm not going to advise you to use 1% or to not use 1%. I'm just going to give you the hard, cold facts that people get ruined by risking 1% of their account per trade because you make you make 2 or 3 or 5 or 6 bad trading decisions in a row. And there will be times where you lose like 5-8 trades in a row. Good luck. Good luck. Oh my god, yeah. God. Yeah, I especially hate seeing like 5% swings in my portfolio. I especially hate seeing 5% swings in my portfolio. If there is a 5% swing in my portfolio, it better be because, of some crazy, it's like when COVID happened, right? And I got long US dollar on that. It's in those sort of situations you're like, well, of course, the thing's gonna 10 or 20x, of course. Yep, so far, things are going so far so good on the trades. So far so good. At least the trades that I got on. Let's see how long we've been going for. About an hour now. Probably time to wrap up. So if anyone wants to hang out in the Discord and go over some trades, go over some trade plans, look at some probabilities, talk more about this stuff, just hop on in, come chat. Just going to be reading research for the rest of the day, doing some programming after that. Alrighty, you guys. I've been your boss, Joe Boss. And I'll see you guys in a